The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy September, everybody. Can't believe it's September 4th already. That's just crazy. I think maybe having the holiday weekend made it seem like, okay, all of a sudden we start the work week again and we're already deep into the new month. So I'm feeling the change of the season here. This is the first time that I have not had the air conditioner on in my office here as I'm doing this show in months. And I'm sure I'll probably need to turn it on a little later today as it warms up. But nonetheless, it's a little bit after 9 a.m. here in the Mountain Time Zone. And I don't have any air conditioners on in the house, so that's kind of unusual for this time of day. So kind of nice. Nice to see that. Hope everybody had a great weekend. I actually had a few work projects I had to finish up. Well, not finish up, to focus on over the weekend, and that's okay. Sometimes it's actually nice to have a little 3-day block of uninterrupted time that you're able to get some things done, and that was kind of my weekend. So hope some of you had some R&R, and even if you did not get R&R, that it was nonetheless enjoyable. So what I wanted to start out with today, as you know, one of the things that I like to do is tracking what's going on in the IPO pipeline. And, you know, we put up a special report up there for you on the homepage of TFNN.com where you can get the lowdown on some of these companies. We picked 7 top companies that have gone public within the past maybe year and a half. And the way these were screened was for both fundamental and technical strength. I'm always looking for earnings growth driven by revenue growth. And in addition, looking for some kind of strength in the chart to indicate that there is good institutional support here, that the mutual funds, the hedge funds, banks, insurance companies, you know, all the usual suspects who buy shares in bulk, that they are investing in some of these companies. And recent IPOs can be quite constructive, because a lot of times these are the newer names that are showing exactly that kind of earnings growth that's driven by solid revenue growth acceleration that you do want to see. That those are the kind of metrics that when the fund managers, the sub-account managers, when all these guys do their screens, I mean, they do extensive fundamental screening, looking for just all kinds of metrics that, frankly, most individual investors really don't take the time to do, even if you do have a screening program that can do this. For example, FinViz, it gives you a lot of different fundamental screening criteria that you can look for, many of the same ones that the pros do. Morningstar Stock Screener also has a lot. Market Smith, of course. So there's several different ones out there that can allow you to do this. However, you know, the bottom line is, let's face it, most individuals don't. It not only requires quite a bit of the knowledge and education of which ones to look for, it also requires taking the time. And frankly, a lot of these, as we see week in, week out here, we talk to a lot of terrific fund managers on here who do look for many of these fundamental indicators. And frankly, what it amounts to for these guys is sitting through a correction in a stock. They'll hold something through downturns that most retail investors really don't have to in most cases. So it's a different way of looking at the stocks. But in any case, we do see that they are looking for a number of these smaller cap names, if they are small cap managers, and many of these stocks, it's their buying that can push them higher. If you were listening to the show on Thursday, we had a terrific fund manager. We had Tom Lamming. He's been a guest a couple of times on the show from the Scout Small Cap Fund, and he talked about a few names that he's holding that you probably wouldn't normally hear about. 2.6. Here, I'll put up the charts right now very quickly just to show you what he was talking about. So this is 1.26, and this is exactly the kind of thing I'm talking about, that you're seeing a big downturn here, but he's looking at this for the longer-term potential. So you see this had a nice little run-up lately, so traders could have done pretty well in this had they identified this as a name. But so that's one. He also talked about Steiner Leisure, STNR. There's another one that Tom was talking about when he was a guest on the show last week. So the point being, these are a lot of the names that won't necessarily come up on some of my screens, but the fund managers are looking at these. When it comes to these newer names, these recent IPOs, they are screening for these. In fact, on Tuesday, a week ago today, we had Keir McDonough, who's a hedge fund manager, was on the show. He was talking about exactly this, that he is looking at many of these recent IPOs for the very same reasons that I talk about them on here, because they can be showing that terrific combination of strong chart action, strong technical support, exactly the guys like Keir and the big fund managers who are out there who are buying these based on those fundamentals. So, having said that, let me see here. I was just doing a little research earlier this morning. I always like to see what's new, what's announced. So we had a couple announcements this morning. Nothing new that's expected to go public this week. Okay, so there's nothing that's set to be priced as of now. Not real surprising. It's a holiday week. Let everybody kind of get back, find their footing. We might see that pace pick up next week. But this morning, we saw Alon USA Partners, and many of you might be familiar with those filling stations, the gas stations. Alon, A-L-O-N. So they filed Friday, actually. I'm reading a report from this morning, but they filed Friday to raise up to $230 million in an initial public offering. Its parent company, let me put this up here, of course, is already public. That's Alon Energy, ALJ. Okay, so that's actually the one that operates the gas stations. It's the refining. Actually, let me see here. Alon Partners would be, I believe, the Alon Partners, the one that is going public. It's the it's the refining and marketing business distribution, based in Dallas. Let's see, the parent company, of course, was $3 billion in revenue in the past 12 months. So the new company, the spinoff, will list on the NYSE under the symbol ALDW. It had originally filed for an IPO in 2008, but retracted that. You saw a lot of that back then. Probably a good decision. No surprise here. We're seeing some of the big name underwriters. You've got Goldman, Credit Suisse, Citigroup. So some interesting names there. So that one is spinning off and going public. We'll see what happens on that one. No pricing terms yet disclosed. Here's another one I talked about recently, Santander, Mexico, the bank. The branch of the, well, not the branch, but it's, again, it's related to the big Spanish bank at some point. But right now it is Mexico's second largest financial services holding company. They plan to raise $3.5 billion. This will most definitely not be a small cap. They want to offer 1.5 billion shares. You've got Barclays. Oh my gosh, you've got all kinds of. I think who's not part of this deal? This will make you laugh here. We've got Santander is going to be involved with its own deal here as an underwriter. UBS, Deutsche Bank, B of A Merrill Lynch, Barclays, Citi, Credit Suisse, Goldman, JP Morgan, RBC, and Banco Itaú, I believe that's the Brazilian bank. So who's not involved with that one. So that's pretty interesting. So they have some incentive to make that one successful. So those are a couple that have filed. And let me see here. Not sure when Santander is going to go either, but those are a couple that you have in the pipeline. Okay, let's take a look at what we have. Got a couple minutes left in this segment here, and I want to take a look at what we have in terms of some of the stocks that are moving today. And please give a call. We are at 877-927-6648. We can pull up some charts, look at some stocks. Like to do that on here, take some questions about some of these different names that are moving one way or the other. And as you know, if you've listened to the show, one of the things that I like to do is buy into strength. Not a big fan of buying something that is trading below key moving averages, that is breaking down. Really like to see this kind of technical support. That tends to bode well for traders on the long side. We are still in a market uptrend, so a little bit difficult to be trying to fight the tape on some of these names with some of these short attempts. So even something like a Netflix where you've got the news, that kind of thing, I do see what's happening on that one today, but it's tough in general to fight the tape when you are when you've got a market trading either direction, to the upside or the downside. Okay, so I put up a chart there, SSP, Scripps. And this was historically known as a newspaper company. You do see on there making a nice move up today. They're still in the newspaper business, but they also have a number of television stations. They have a TV syndication arm. And this stock is up today on a deal with TiVo. It's going to be using TiVo's research and analytics. Now that's kind of interesting because let me put a chart of TiVo up here for you. And, you know, I mean, this thing is a penny stock. It's just been a dog. And I'm a TiVo customer. I still have the TiVo service here in my house, but I have never been remotely, no pun intended, interested in buying the stock. I'm just trying to pull up something here. So yeah, so I'm going to talk about TiVo for a second, and then we can come back after the break and talk about SSP, Scripps. So TiVo, we've seen declining revenue growth as a general trend. We saw a spike up to 48% revenue growth in the quarter before last, fell down to 7% revenue growth. That's not what you want to see. This thing is supposed to show earnings per share of 80 cents this year, but then losses again. I mean, this is just a company that's had a string of losses. What's interesting about this Scripps deal is you kind of wonder, okay, is this research and analytics arm where this company is going? Is that something that could be acquired? So, in any case, we'll come back and talk about that a little bit more after the break. I'm Kate Stalter. This is the Small Cap Roundup.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, we are back. A few minutes away from the European close. We'll have that for you after the next break. Okay, so I wanted to kind of finish up some of these thoughts here about TiVo as a company, as a stock. So the stock is not impressive, has never impressed me in any way. However, there's a lot of talk about this being a possible acquisition target at some point. The stock really doesn't reflect that too much, so maybe that's not being taken seriously. But the fact that maybe it has some technology here or some proprietary maybe algorithms in terms of its data analytics, that could be something very interesting. That's what kind of this Scripps deal makes me think a little bit. Now, TiVo also got a bounce today, but is reversing lower, I'm noticing, as a result of this deal, getting support above that 5-day moving average, so that's good. One of the things, this is so funny, I'm sure many of you remember, I'm sure we all remember, just a few years back, the Janet Jackson wardrobe malfunction during the Super Bowl. And remember what happened? Well, a lot of things happened after that, but you remember that one of the things that happened was TiVo announced that it was one of their most rewound and rewatched segments, and people freaked out because, oh my gosh, TiVo has my data. You think? Oh, gosh, that just cracked me up. Of course they do. That's what it's all about. They give you recommendations based on what you've watched before. Of course they have the data. They were talking about data released in the aggregate. I mean, really, you think these companies have employees that sit around and analyze what you, Mr. or Mrs. sitting at home, is watching on any given day? I don't think so. It's data analysis in the aggregate. But that was kind of an interesting thing. I got a kick out of that everybody freaked out so much. Okay, let's take a look now at the stock I was talking about originally, Scripps, which has a little bit more to potentially make it stand out as a decently performing stock. So this one, you know, being in the newspaper business, we've seen a string of losses here. Very, very, I would say, poor technical performer up until pretty recently. Looks like they're maybe taking some steps to bolster the TV business a bit, which would probably seem to make some sense. You've got 2 quarters in a row of growing revenues. So 15% revenue growth in the quarter ended in March, 19% revenue growth in the quarter ended in June. You had profit of 9 cents a share in the June quarter. Huge increase, much better increase over the year earlier, which had a loss of 4 cents a share. Now you can see on the chart that I've put up for you there on Tiger TV, nice move up today. This is also reversed a little bit. And that's why I really don't like to buy stocks on the gap up early in the session, because you frequently see a nice gap higher on some kind of news like that and then some kind of pullback. So if you buy into that gap, you often see some of your gains evaporating very quickly thereafter in the session. So that was one that I was kind of looking at this morning. Let me show you another one here. The ticker is WAC. Now this one is Walter Investment Management. This is also a small cap. This is a REIT that invests in subprime loans. And this is making a move today because it made an announcement. It is purchasing a company called Reverse Mortgage Solutions. And you've got all the TV stars out there, the 80s TV stars. You've got Robert Wagner and, well, I guess maybe what was now I'm drawing a blank. The show he did with Stephanie Powers that was big in the early 80s. You know the one I mean. And then you've got Fonzie, who's out there, who's doing the reverse mortgage commercials. I think you might also have the guy from Starsky and Hutch is out there doing reverse mortgage commercials. You've got a lot of these guys. It's very interesting. Maybe tells you something about the demographic that those are aimed at. But Walter Management making a big move up today, about 9% in heavier than normal volume. This company has a market cap of about $880 million. Thinly traded, moves 174,000 shares a day. I like the fundamentals on this, by the way. And good earnings potential. Very, very solid earnings potential even before this announcement in terms of what the analysts are looking at. So this is one that hadn't really made my screens because it's very thinly traded, but nonetheless could be worth a look. You don't want to buy it till it pulls back, though. All right, stick around. We'll be right back after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Welcome back. We do have our European close to the downside across the board. We've got the U.S. indexes trading lower, although, as you see, we do have some quite a few of the smaller cap names that are trading to the upside today. Let me just see something here. I was checking this a few minutes ago, but I'm going to check it again. Just to let you know, we do have here the Low Price Leaders newsletter. You may have heard the promo for that during the break a few minutes ago. And you can get information about that on the homepage of TFNN.com. You know, one of the things that I really tend to do is risk management. I don't like to overtrade. We're really going to be cherry picking some of the very best low priced, and by that I mean $5 to $12, no penny stocks. We like to pick for you the low priced names that are leading, hence the name of the newsletter, in terms of fundamental and technical potential, as well as small cap names, as the name of this show suggests, with a market cap of under $2 billion at the time that we buy them, with liquidity of between about 250 or 300 million up through $2 billion, or market cap rather, and liquidity of 300,000 shares a day on average. That's why some of these thinner stocks often don't really make it onto my screens, the ones that I tend to use for the newsletter, but I will let you know about them if I hear about them and they do look pretty good, a lot of times we will put some of the thinner names in there with all the appropriate caveats. Now, I want to tell you, we have a housing-related name that is one of the holdings right now that is just continuing to trend higher. It is bucking the market downtrend today. And of course, that's not always going to happen. Most of the time, stocks will trade in tandem with the general market. But when you have these leaders, okay, that have this proven record of technical and fundamental strength and also good earnings outlook for the next couple of fiscal years, you often have those that are the ones that can outpace the market. So we're seeing that today in terms of one of these holdings that we have there in the newsletter. This has been a very good one for us. And we've had a number of names that have been in there that have shown double-digit growth. But I do want to just let you know, risk management is a key component here. We do keep in place some very strict stop losses and trailing stops, tending to use moving averages as the way that we gauge these, not necessarily a percentage below a buy point. More that it's moving averages, because with a lot of these smaller names, if you tend to wait till there's a certain percentage below a buy point, you really could just end up losing a whole lot of money on that one, and you don't want to go there. So we tend to use the moving averages, shorter term averages. That tends to work pretty well in getting us out of there. It does work well. There have been a number of cases where there have been stocks that we have either seen the trailing stop trigger or either the stop loss. We've prevented portfolio gains or managed to prevented losses. See, I'm just back from holiday today. Can't my holiday weekend working, right? So you want to be preventing losses and keeping your gains. And we managed to do that by implementing these strict stop losses and trailing stops. So let me just turn to a few of these sort of housing and building related names that I've been looking at recently. Let me put one up here for you, because these are not names that we're holding right now, but it just could have some potential. This is Trex. You may see this. Speaking of television, I was talking about some of these old TV stars that are doing the reverse mortgage commercials. Well, there's nobody doing the Trex commercials, no celebrities, but you do see these quite a bit on some of these cable networks. I believe HGTV. I don't watch them too much anymore when I tend to be going through a remodeling project, which I am not right now. I watch more HGTV. Haven't watched it much lately, but I do know that Trex is a big advertiser. So it's pulling back today, but you notice this has been trending nicely above its 50-day moving average. Had a nice little uptrend there recently, kind of within shouting distance of some of this resistance it hit over here, pulling back today along with the market. Let me just get a couple of the fundamentals on this particular name, and we can take a look at what the potential would be here. So it's expected to turn around earnings growth this year. It had a loss in 2011 of 24 cents a share, expected to be profitable to the tune of $1.58 per share in 2012, up by 39% in 2013 to $2.20 per share. Now, of course, remember, these are analyst estimates. You don't want to make your buy decision based on that. And they can be wrong just as much by underestimating as they can by overestimating. As you see that with all these companies that tend to beat the analyst views. Apple, until recently, having had a very strong history of doing that. But so you do see, I do incorporate some of the estimates just as a gauge of the institutional confidence in a company at any given moment. We're seeing revenue growth begin to resume after some shaky quarters there in 2011. So this one has some interesting aspects to it. You might kind of be looking at. Let me put this back here on a weekly chart and show you something kind of interesting about this consolidation. You really could be looking at this one if you're looking for some of these more classic chart patterns as a double bottom. And I know a lot of technicians from various disciplines do tend to look at that double bottom pattern. Here's the intermediate resistance over here that you're looking for it to kind of clear. We're in some shouting distance of that right now, but you're still waiting for that. One thing that can be bullish is, and not everybody looks for this, but some methodologies do, when you're looking for this second leg in the double bottom to undercut the first, and that can be frequently that more definitive kind of shakeout that will set the stage for more of the value-oriented buyers to come in. So that could be an attractive technical formation for some of these buyers who want to come in at what they perceive as a more attractive valuation. So anyway, so you have Trex right there. That is some kind, and of course they make the flooring, fencing, decks, a lot of the materials that they use in there. Let me show you another one. This is kind of interesting that I was looking at. Fortune Brands and Home Security. Now this was kind of one of these conglomerates that was involved. They had Jim Beam, they had golf accessories, they had the line of kitchen and bathroom faucets and fixtures, home security systems. So what they did was they kind of split everything into two different companies. So the Jim Beam is now traded separately, BEAM. It's just for fun. Let's take a look. Why not? There we go. So there's Jim Beam. We know what this company makes. So this one is consolidating a bit, but the housing related name, let me come back to that. The one with all the kitchen and bathroom faucets and fixtures and home security. This one you see doing very nicely when it comes to the technicals. Some pretty good performance on this one. Now, this has been publicly traded as its own entity since October 2011 and really didn't pop on my screens earlier. It had an earnings decline. If you just look at this particular business unit that was spun off, had an earnings decline in 2011. Now it's expected to finish this year with earnings per share of 84 cents. That would be a 40% increase, another 35% increase that analysts are eyeing for 2013. Now, look at this on the weekly chart. That's very nice. Pulled out of this consolidation. It's pulling back today, but so is the market. I'm not really too worried about what we're seeing here on a daily basis because my trades tend to be on a more intermediate basis most of the time. General holding time frame might be weeks, sometimes months. That's been harder in the past few years with the market volatility. Tends to be more in the weekly range. So let me see. I'll tell you what I'm looking at here today. It's a little bit below that 5-day moving average. Will be interesting to see how it finishes the session. But after that run-up, what was interesting is we did see kind of some volume consolidation over here. Not unusual the week ahead of a holiday. And we'll probably, maybe in a lot of stocks, see some lower volume this week because, of course, there will only be 4 trading days. So that's kind of an interesting one that caught my attention, again, from the housing and building related sector. Now, here's one that I know I've talked about numerous times here on the show, but it's an interesting one. Let me get the ticker up there for you. It's Beacon Roofing, BECN. And this one rallied to an all-time high on Friday. It pulled back. It ended the session a little bit lower. It's trading a little bit lower today. Went public in 2005. So that is also within the realm of what I consider to be a new company. Went public at $13.50. Now this had an interesting early stock split. It split in May 2006. So the split adjusted IPO price would be $8.67. It is now trading at $27.51. So, again, you see nice rally here for anybody that has held throughout that time or got in fairly early. Not very well known. They recently acquired a couple of materials distributors, and that boosted results in the most recent quarter. So that's a couple interesting ones right there. And, of course, let's just to stick with our housing theme, another one that I tend to look at quite a bit, we've talked about this, is Ellie Mae. And this company makes mortgage origination software for the lending business, of course, for professional clients. Now, this one went public at $6 a share back in April of 2011. This one might be in that IPO report. I believe it is. Or if not, there's one that's very similar to this that's in the IPO report, because this is one that I like quite a bit. I've been watching this. I like the pullback. I didn't like to get in on this as it was rallying higher here. It was a little bit frothy for my liking. Now it's pulling back. Let me tell you what it's doing here on a daily basis. It's just a little bit fractionally below that 5-day exponential moving average. We've seen some tight trading ranges recently when it comes to this stock, so this is looking pretty good. I do like the consolidation here, so just kind of one to watch. Let's see, when it comes to the fundamentals, it's expected to triple its earnings to 73 cents a share this year, and that's pretty much expected to be flat in 2013. But, who the heck knows? Like I said, analysts can misunderestimate these. Get in a little buzzword there for political season. Either to the upside or the downside. We've seen some very strong revenue growth acceleration recently. So some very good things to watch in this one. Small company, market cap of about $643 million. Not bad liquidity for that size, though. 618,000 shares a day. You can see right here, volume trends have kind of picked up recently from earlier in the year when they were lower. So maybe with some of this renewed attention to the housing market, you might be seeing some more interest in this. And one thing we did see that was very interesting was a huge pickup in institutional ownership in the second quarter of this year. So that was indeed something pretty interesting that we saw. So you are seeing a lot of renewed attention to the housing market in general. Let me kind of show you a related name, which is one that we did own for a while, and it's still consolidating here. And this is NSM. This is a non-bank mortgage servicing company. And you see it got some support there recently, right here at these levels. That would have bounced off that 10-week moving average, still consolidating below its prior high. A little bit hard to see on here. Its all-time high was reached earlier this month, was $28.75. As of today, it's trading around $27.73. This has kind of moved into mid-cap range, $2.5 billion. About 800, little shy of 800,000 shares a day that trade. So this one has some nice liquidity as well. It is another one that I like to watch. Went public pretty recently, back in March of this year, so very new. All right, stick around. We have one more segment on today's Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're back. Last segment of today's Small Cap Roundup. Now, I've put for you there a chart of something called Questcor Pharmaceuticals. I've talked about this one quite a bit on the show. Let's see here. It's actually a mid-cap. Let me pull up the market cap of this one. Had a news article there up on my screen. So this has a market cap of about $2.8 billion. Terrific liquidity, moves about 2.7 million shares a day. Now we're seeing a gap up today, although it is reversing. Not uncommon. We saw that on one of the other charts a moment ago on the Scripps chart, I believe it was, when a stock gaps up on some news and then kind of reverses a little bit lower as people who bought at lower levels take some profits. It's as of now, it's up about 10%. And there was some news here on Questcor, some changes to the Medicaid reimbursements for one of its drugs that boosted the stock. Now, this is one that fundamentally it just has been landing on my screens for quite some time. And I think just because you've seen double and triple digit earnings growth recently. Now, one thing that's kind of interesting here, if you take a look here, this recent consolidation kind of undercut the low of the prior consolidation right over here. And you see that it did fall below some of the key moving averages. I'm going to put this up here on a daily chart right over here. There you see it fell below key moving averages. Let me just take a look where this is at right now. I would kind of wait for this to consolidate at this point. We are obviously, we're having a bullish crossover here where you've got your shorter term moving averages moving above that 50-day line. So that's kind of a potentially very good indicator there. Yeah, so maybe this Medicaid news could be something that drives the stock higher yet, but I just wanted to show you that one because that got my attention this morning. Now, I was talking about some of these housing-related names. Let me show you one more here. Okay. And I've talked about this one in the past. This one, the ticker is HEES, and it's H&E Equipment Services. So they lease construction equipment. So once again, could this be potentially one of these housing-related names? Just kind of looking at the consolidation over here. Now, this is kind of on the thin side. Trades about 224,000 shares a day. Small company. Market cap of about $635 million. They're based in Louisiana. I don't know if you can necessarily read anything in there off of any kind of hurricane cleanup because that probably would have been priced in several days ago. In fact, I think it was. I'm looking at what we're seeing here last week. That looks like it would have been priced in much earlier than today, if indeed that is any kind of sizable business there for the company. You do have to wonder, is this some kind of housing-related play as well? It has, even prior to all this news, we were seeing some triple-digit earnings growth, revenue growth acceleration, although some of the rates were slowing a little bit. Expected to earn $1.02 per share this year. That would be nearly 4 times the prior levels from 2011 when it had 26 cents a share. We are expecting $1.26 per share earnings in 2013, another 24% growth. So HEES is an interesting one to look at, just kind of one that I'm continuing to track, even though it's a little bit on the thin side. So that's a wrap for today. Check out the Low Price Leaders newsletter on the homepage of TFNN.com. And make sure you take a test drive of that one. You can do that right now. And you also want to get in before the rates increase. So I will be back here on Thursday. Have a great week until then.